Welcome back to CopyTrader, and this week, as usual, I'm going to start with price action, and let's go straight into price action. So starting with Bitcoin again. Now this is a chart of Bitcoin, and I want to start with a long-term, is it long-term now? No, that's not the right word. I want to zoom out, okay, and see what price action looks like in Bitcoin over a period of maybe, let's say, the past 10 years. Well, Coinbase only has data up till 2015. So I'm going to switch this to the log chart just to show that Bitcoin is in a consolidation. I think I mentioned this last week. So here's this uptrend from 2015, topped in 2018, and then this downtrend that bottomed in 2019. And since then, the price action has just been within this channel. So it's very important to note that. For today, I want to focus on this small price action here. So I'm going to switch back to the linear chart, and I'm going to clean up all these drawings I have on my screen. Take all of them away, switch back to linear, and then zoom in on this. So this is what I want to look at. There is within this large consolidation the price action has been in since 2018. Price is now trapped within another range. So here is this uptrend here from March 23rd. So that uptrend hit resistance here at 10,000, and it retested again here. And then on the 27th of July, it broke out to the upside. And then there's this new resistance level here at 11,900. And that was tested several times. It actually broke out, but it was slammed back down again on the 18th of August. And then another test. And then it pulled back to this same level, 10,100. And it tested that support several times in this region here. So resistance at 10,100 became support at 10,100 in September. And since then, price has bounced, it has pulled back, retested that support, bounced again, and now it looks like it's going back down to retest this support here. So that's been the story of Bitcoin. Nothing exciting. We're just in one of those periods where we have to wait and wait and wait. But it still doesn't look good for Bitcoin. And this is the reason. It looks like Bitcoin is in a range, but it's also looking like a short-term downtrend. So this is a high. Okay, that high was at a price of 12,300. And that high formed a low at 11,300. And then a lower high, that's the key word, lower high at 11,800 or 11,900 thereabouts. And then a lower low, which took price down to the 10,100 support level. And then it formed another lower high. And it tried to form a lower low, but it didn't. So it just bounced off that support. And again, it has formed a lower high. So the question now is, what's going to happen next? Is it going to bounce off this support again at 10,100? Or is it going to form a lower low? So that's where we are now. A downtrend is a series of lower highs and lower lows, and we have the lower highs and the lower lows. So Bitcoin is in a short-term downtrend. It remains to be seen what this is going to be. Is it going to form another lower low to continue the downtrend, or is it going to bounce off the support? If it bounces, then we're going to have what traders who love chart patterns will call a descending triangle. And this is that triangle. We already have a triangle, but it's going to be the third time it's going to test the bottom trend line of that triangle. A descending triangle is a bearish pattern. So there's so many signs pointing towards bearishness for Bitcoin. And if I turn on the Ichimoku cloud indicator, you'll notice that price is currently below the cloud. So Bitcoin is bearish. Is it going to fall lower? That's what we're waiting to see. Okay, I'm going to move on to the US dollar. Now, the US dollar, I spent a lot of time on the US dollar last week. And it looks like what I was expecting is playing out exactly as I laid it out. So this is the low here, and price, or the index, this is not price. The index formed a high, which is higher than this previous high. Okay, so that's good. And then it formed a lower high. And then from there, it formed a higher high. And last week, we were somewhere around here. So this is Friday, Thursday, Wednesday, Tuesday, Monday. So last week we were here. The index closed at 94.58. So what I was saying last week was, if this is truly an uptrend, we might see the index forming a lower high. Because if I turn on my Fibonacci retracement, you will notice that the index began to pull back just as it hit the 23% Fibonacci retracement level before breaking out of the cloud. So let's take this as a pullback to form a lower low. I have drawn this white diagonal trend line. Okay, so what I want to see here is I want to make sure that price, or the index rather, I've got too many lines on the screen. Let me take some of them away. All right, what I want to see here is I want to see the index not form a low that is lower than this low. So it shouldn't go below 93. Now, this is the range from the past 3 months. Okay, this yellow lines. The index is currently sitting on top of that range. So that range has formed a support, or should call it a channel, and that's at 93.81. So the index can bounce off here to form another high, okay, which will make this high, lower high, low, high, higher low, higher high, higher low at 93.67, and higher high to break out of the cloud. Or it can pull in deeper. Here to this diagonal trend line. We almost got there anyway. Somewhere down to this point, and then bounce to form a higher high. Alternatively, it can pull in below that trend line and then bounce to form a higher high. That's what I'm expecting to see. If this is truly an uptrend, the index should not fall below 92.79. If it falls below 92.79, I'm going to get out of my long position. So that's the US dollar index. Now, gold. If the US dollar is in an uptrend and the correlation between the US dollar and gold is currently very high at about 80%, then I wouldn't be surprised to see gold falling lower. Now this is the GLD, which tracks gold spot price very well. And you'll see that gold itself is looking like it's in a downtrend. Well, it was in a downtrend. This is a triangle, and that triangle broke out to the downside here. So it tried to bounce, and it's hitting resistance here. So currently price is testing resistance at 178. Is it going to break above resistance, or is it going to pull back? Now, if this correlation between the US dollar and gold continues to remain high, I'm expecting gold to do the opposite of what the US dollar is going to do, which is continue lower. That's what I think is most likely. But as a swing trader, all I'm looking at is my levels. I'm not trying to predict anything. If gold continues lower, then my first level is going to be here at 170. So I won't be surprised to see price come all the way down here, and then it might bounce. But 170 is a very weak support. The next reasonable support level is here at 164. And if 164 doesn't hold, the next one is at 157 or 160. So in between 160 and 165, there is very strong support zone. It's a very strong support zone there. So I won't be surprised to see price falling. Now this is like a worst case scenario. I'm not saying price is going down there, but if it falls all the way down here, this is the area where it might find support between 160 and 164. Depends on how strong the uptrend in the dollar is, which is looking like it might be a strong one. All right, moving on to the SPY. I've got all my levels drawn here in the SPY. The lowest level I have here is 270, and then 280, and then 320, and 338. So this week, price tested 338. That's this candle here. Tested that candle, and then on Friday, there was a mini sell-off because of Trump's announcement that he was sick. Now, as a technician, it doesn't matter what the news event is. The focus is on the chart. So, price, there was a correction in price, and it bounced off the 320 level, which was within the cloud. So that bounce took price back up to 339, retested that resistance level, and there's currently a pullback in progress. It's not much of a pullback, but we have closed lower than the price on Thursday. So how do I approach this market now? If this pullback continues, then the first level is 320 down here. This is exactly where most people bought the dip of this correction. Now, what I would like to see is for this uptrend, this bounce to continue higher and take out this high where this line is. That's 343. We need to take out 343. So if we can turn around and continue higher, then I know the uptrend has resumed. and then the next target will be 360 here, and then form new all-time highs. So for now, we need to take out 343, take out this high right here. That was the high on the 16th of September. We need to take out that level. If we cannot do that, then we'll probably continue down, retest the support at 320. If that doesn't hold, the next level is 300, which is terrible because that's far below the cloud, and that's probably going to be a full-fledged downtrend, because this will be, if that happens, this will be this is the high, and this is a low, then a lower high, lower low, lower high, and then this will be a lower low. That will take us to almost bear market territory, because that will be about 20% correction. Now, what am I expecting next week? So that's going to take me to market breadth. That's the only way to try to see what is happening within the market itself. So I'll start with the advanced decline line. Now, looking at the advanced decline line, this is the high from September right here, and this is the low, and then lower high, lower low, and price bounced back up, but it did not take out this high. And we can see the same in the advanced decline. So this is the downtrend. This is the high, this is the low, lower high, lower low, lower high, lower low. So if the market is going to recover and continue the uptrend, then I would like to see this high taken out. Now, this is the New York Stock Exchange. It has failed to take out that high. That doesn't mean it's going to form a lower low. But based on where we are right now, we have not taken out this high. So anything can still happen. I only get excited when we take out this high. And you can see the same trend in the NASDAQ. This is the high, low, lower high, lower low, lower high, lower low. And it looks like we are forming a lower high because this high has not been taken out. The downtrend is a series of lower highs. It's a different story in the large caps. Okay, this is the high, low, lower high, lower low. Now we have equaled that high, but we did not take out that high. So it's still not a full recovery. This bounce still needs more momentum. Who knows, maybe it's going to go lower next week. Mid caps are doing better, which is surprising because mid caps have clearly taken out that high. So this is the prior high, and the advanced decline line has closed above that prior high in mid caps. Small caps, similar to large caps. The advanced decline line has equaled the prior high. So we are at a very important point in the market. It remains to be seen if the advanced decline line, the cumulative advanced decline line, will turn lower to form a lower low, or it's going to close above the prior high. Now, another measure of breadth is the 200-day moving average. This measure of breadth is more positive. Now, with the 200-day moving average, I want to look at the percentage of stocks that have closed above that moving average across different groups. So this is this high here in September. I'm going to try to eyeball it and draw a line straight down right there. Okay, not very accurate, but it's okay. So you'll notice that in June, when we had this similar pullback or correction as this, almost the same amount of drawdown. This is the amount of decline in the percentage of stocks above the 200-day moving average. And this is that decline here, not as bad as the June decline. Okay, I'm going to clear all these drawings. Now, after that drawdown, stocks have resumed. A lot of them have recaptured their 200-day moving average. And I expect to see a recapture of the level back in September, that line. So currently, in the New York Stock Exchange, 54% of stocks are above their 200-day moving average. So we need to get back to a level above, somewhere around 59, basically. 60. I want to see a level around 60, where that line is. The Nasdaq is not doing so well compared to the New York Stock Exchange. You can see this is that level in September. From here, we still have a long way to go to recapture that level. If I move down to the large caps has almost recaptured the level back in September. So this is September here, and large caps are almost there. So 63% of stocks in the S&P 500 are above their 200-day moving average. This is already a very good breadth. Okay, 63% is very good. In a bull market, you want to see around 50% of stocks above their 200-day moving average. So 63 is okay. In mid caps, we're still far below the prior high. Prior high was something around 60. We're currently at 50%. Small caps are doing terribly. It's around 45. So when you look at it using this breadth measure, the market is not doing too badly, because across the New York Stock Exchange, the Nasdaq Exchange, large caps and mid caps, the majority of stocks are above their 200-day moving average. That's good. No complaints there. And then the last measure is to check the amount of stocks making new 52-week highs. Now, if I look at my the New York Stock Exchange, 30 stocks made new 52-week highs. Looking at the Nasdaq, 25. If I look at large caps, this is interesting. Large caps, 9 stocks made new 52-week highs, despite that pullback on Friday. 9 stocks made new 52-week highs, which is pretty good for me. 9 stocks, and no stock in the large caps made 52-week lows. Of course, that's expected. Looking at mid caps, 15 stocks made new 52-week highs. 17 stocks in the small caps. So if stocks are making new 52-week highs and the majority of stocks are above their 200-day moving average, and more of them are capturing their 200-day moving average, and the cumulative advanced decline line is trying to recapture the prior high, that is overall positive for the market. So I think breadth looks pretty healthy in the market. Now, for stock picks for this week, I want to find these stocks. This is what I love to do, because I like stocks that have good momentum. These stocks that are making new 52-week highs in the large caps, mid caps, and small caps, I want to find them. So in order to find them, I am going to scan large caps, mid caps, and small caps and I am going to scan for stocks that are making new 52-week highs. Okay, that's it. That's the basic criteria that I'm going to use. They have to make new 52-week highs, but I want to add some other criteria, because if I add up all these stocks, I've got 9 in large caps, 15 in mid caps, 17 in small caps. That's already adding up to that's over 30. That's too many. So I want to narrow it down. I'm going to add some extra criteria to narrow it down. So 52-week highs. I'm also going to scan for stocks. That is, these stocks that I'm scanning for making new 52-week highs. They should also not, their RSI 14. Okay, RSI 14 period should not have fallen below 40 over the past 2 months. That's another criteria. So I'm not looking for stocks that were oversold and then formed new 52-week highs. No, I want stocks that have maintained their momentum. So RSI 14 period should not have fallen below 40 over the past 60 days. I'm also going to add another criteria. I want these stocks to be in a I want them to be in a strong uptrend. And there's a way to search for that. I want them to be in a strong uptrend. That's another criteria. Then I want stocks that are in demand, because technical analysis is basically supply and demand. I want stocks that other traders want to buy, or stocks that other traders are buying. So I want the simple moving average of the daily volume over the past 5 days, okay, to be greater than 2 million. That is, the simple moving average over the past 5 days of the daily volume should be greater than 2 million. That tells me that a lot of shares are being traded. So I've got 1, 2, 3, 4 criteria there. And what other criteria? So RSI, that's momentum. Then I've got uptrend, I've got volume, I've also got 52-week highs. So using this criteria, I wrote some code and I scanned and I got this result. I'm going to bring up the result. This is the result. I got 6 stocks. FedEx Corporation, Lena Corporation, that's home construction, DR Horton Incorporated, home construction, Builders First Source Inc., building materials, Toll Brothers Inc., home construction, and Target Corporation, broadline retailers. So you can see this is dominated by home construction. There's something about home construction that is still generating a lot of interest. And then I applied some, because I only need one stock. I want to find the very best. These are all great stocks. They're all forming new 52-week highs. They all have great momentum. They all have high volume, high trading volume, and they're all having strong uptrend. But I want to find the very best amongst them. So I applied some extra criteria, and Lena Corporation turned out to be the best. So this is Lena Corporation. You can see It's in an uptrend clearly. Now, what else do I want to see here? I also try to confirm what I used in my criteria. So I want to see outperformance. That's outperformance right there. I need to refresh this page. It's not working the way I want it to work. Okay, Lena Corporation, switch that to this. Yes, this is a template I want. I'm gonna make this the default template. Okay, that's done. So, Lena Corporation. The price is clearly moving up. I like that. I also check the short-term momentum using the rate of change. Now you can see that momentum over the short term is beginning to turn upwards. That's this area here. It's just beginning to turn upwards. And that's after a period of very low rate of change. And that zero line is where the rate of change has turned around in the past, in July, in April, and back in 2019. I also check the uptrend. Now this is showing the strength of the uptrend. And there's a scale being used here from 0 to 100. So anything between 80 and 100 is a strong uptrend. So Lena Corporation is currently at 95. So that is a very strong uptrend. I was looking for strong uptrends. I got a very strong uptrend. And if you look at the unbalanced volume, you can see that it's trending up. I like that. There's a lot of interest in this stock. So those are some of the criteria I used in selecting which of these 6 stocks will be the stock for this week. I also looked at the relative strength, and this is where Lena Corporation performed far better than all the others. Its industry, what's its industry again? That's home construction. It's currently in an uptrend. You can see that uptrend. Good. Lena Corporation is outperforming that industry. That's good. So the industry is in an uptrend. The stock is outperforming the industry. The industry, home construction, is outperforming the S&P 500. And Lena Corporation is outperforming the S&P 500. So whichever way you want to assess this stock, it is doing fantastically well. And then I try to integrate some fundamental analysis to this stock again. And my goodness, it's a fantastic stock. So I switched from using Coifin, because you have to do all the work yourself, to using Simply Wall Street, which provides all the analysis I want to see with some fantastic visualizations. So they use what is called as snowflakes. So this is a snowflake for Lena Corporation. You can assess its value, future performance or growth, past performance, financial health, and dividends. So looking at this snowflake, the financial health of Lena Corporation is strong. Okay, it has very good financial health. It is currently undervalued. That was mind-blowing. How can a stock with great momentum and a strong uptrend, okay, making new 52-week highs, be undervalued in this market? I was amazed. So if you scroll down, you see all this. You see the risk analysis. One of the downsides to this stock is it has a high level of debt, which is not good. But this is a debt-based economy. Companies use a lot of debt in order to, finance the operations of their organization. That's okay. I don't mind that. It's very volatile. That's not a problem. I'm okay with that. Significant insider selling over the past 3 months. I don't care about that. Now let me look for the things I care about. I want to see that valuation. Now using the discounted cash flow, the current price is $83. The fair value for this stock is $93. So it is currently 10% undervalued. I am surprised to see that. Very surprised. If you look at the PE ratio, its PE ratio is currently below the industry average and below the market. That's good. If you use the PEG ratio, well, it doesn't do well in the PEG ratio. If you use the book ratio, it is also below the industry average. So using different metrics, this stock is undervalued. It makes it amazing. Future growth. Well, it's not really a growth stock, so I don't expect much there. See, this is a forecast of earnings. Earnings growth is below industry average, market. Annual revenue, forecast annual revenue growth is also below the industry average and the market. That's all right. It's not a growth stock. Returns on equity, not good. Past performance was fantastic. Its past performance has been good. Quality earnings, profit margin is growing. You can see all that analysis here. Earnings trend has grown significantly by 25% per year over the past 5 years. Return on equity, not so good. Return on assets, that's okay. Financial health, this is how Simply Wall Street determines the financial health of the organization. So they compare the short-term assets over the short-term liabilities. The assets are greater than the liabilities. Long-term assets and liabilities are almost even, but liabilities are more. So overall, it's good. It has a lot of debt, but use debt to finance your operations. That's okay. So having looked at the fundamentals and the technicals, this is what is referred to as a good company with a good stock. Now this is where you combine technical analysis with fundamental analysis. Fundamental analysis analyzes the company. Technical analysis analyzes the stock. There's a separation between a company and its stock. So Lena Corporation is a good company with a good stock. So I'm going to open a market order. I'm going to open an order for Lena Corporation, LEN, $500. This is my virtual account. It's not real money. My portfolio has been doing fine. Take a look at this. Sunrun, up 37% since the day I added it. I added this stock on the 31st of August. Darling Ingredients, up 8%. Nike, 6% up. Archer Daniel Midlands, well, not doing too good. And the others, they're not doing too badly, but currently in a loss. That's okay. So Lena Corporation is my stock pick for this week. So that's all for now. I'll see you next week.